As a result, during my last broadcast, when I had a short position here, on OKX I had about $90,000 floating profit. On Binance, there was an unrealized profit of about $200,000. On OKX, the stop loss was triggered and lost $28,000. And on Binance, I lost $71,000. Last time when I did the broadcast, it would be around this time. And before that, I took a short position here. The reason was that a correction is absolutely necessary. Even if a new bull market opens and surpasses the previous high point of $110,000, we need to undergo a correction before moving forward. Because the significant rise that started from here continued to gain momentum over time. I thought that this might be a complete 5-wave pattern of 1, 2, 3, 4, 5. So I entered a short position. And if you look at the trend, connecting the low points and facing it against the upper trend line, it fits perfectly. So from a typical trend perspective, it looked good, hit the peak, and then deviated from this trend. This means this cycle has ended, whether you look at it from a wave perspective or a channeling perspective. The short-term peak that started here has ended, and after a correction, it will rise again. If we ask how much of a correction might occur, using the Fibonacci ratio, it's almost 0.618. So in my last broadcast, I took a short position here, and where was my first partial profit taking? Here, because it's the bottom of the first support zone. And the second target point is, at 0.618 or below, I think I'll cut a quarter of the position here and hold the rest. So I set my first target price here and my second target price here. As a result, during my last broadcast, when I had a short position here and it had dropped to around here, on OKX I had about $90,000 floating profit. On Binance, there was an unrealized profit of about $200,000. But in the end, to be precise, I had set a partial profit taking at the 93,100 level, but it wasn't executed. And as it rose to the 93,300 level, I actually had to take a small stop loss here. On OKX, the stop loss was triggered and lost $28,000. And on Binance, I lost $71,000. So approximately lost $99,000. There was a loss. Compared to the last broadcast prediction, the correction was way too short. So how is it being viewed now? Well, it's one of two things. Was the correction too short? Wave 1 and 2 are done, and wave 3 and 4 are coming out this way. Will this wave form like this? The first thing that comes to mind is this, assuming this is an impulse. And secondly, what I'm really leaning more towards is that I'm quite suspicious because the correction that was provided was way too short and lacked sufficient detail. It didn't address all the necessary points I was expecting. It didn't even reach 0.786. When a wave has ended, and such situations like short correction are rare, maybe once in 10 times. Since we always play probability games, if there's a 90% chance but that it's not the case, we can think about what else it could be and anticipate the ending diagonal. Like this. Could it come out? There's a possibility, so I'm just making a preliminary judgment, and if it falls and then rises in an ABC pattern, then another ABC pattern, and then breaks, we'll see a sharp drop. Meanwhile, there's a 4-hour bearish divergence, expecting double bearish divergences. We could see this as an ending diagonal completion between waves. If it forms like this, it would be a very textbook situation. If this happens, I think we can confidently enter a short position. To describe the current situation precisely, we still don't know if an ending will occur or not. But I made a prediction and prepared. If an ending does come out, if we take a short position after it had rise, the stop loss line at the top is quite short and the profit line is at least this long. Then if we calculate the profit and loss ratio, it's about 8-to-1, which is good, right? And now in the chat someone like Newbie is saying, short? Again? Then could we take a long position here? Where would the profit target be if we enter here? Where's the stop loss point? There's no setup, and there's no basis for it. As I mentioned before, the probability like impulse is 55, ABC probability is 45. That means there's a bit more weight on the upward probability, but I specifically looked for a short here because if I look at the long here, the risk-reward ratio doesn't work. I talked about casinos before, right? Probability and risk-reward ratio, the advantages we can have, the edge. If now, those who do trend trading can do something like this. Assuming this was a short-term high and the correction was sufficient when it breaks through here. You enter a long position and then observe the trend. You'd hold until the previous high breaks. If it touches, it's a small loss. However, I don't like trend estimation trading or breakout trading. I prefer counter-trend trading or counter trading. That's why my profit and loss ratio is always good. So right now, I think I'll wait for an ending. If an ending pattern forms, I'll gratefully enter a short position, and if it doesn't form, I have no choice but to stay on the sidelines. If this keeps going up, I don't think there'll be a good entry point for a long position. As we get closer, the pressure from the previous high will increase, so entering a long position in the middle, I think that's impossible due to near resistance at the high. Even if, looking back later, it turns out selling long here was the right decision. Even from here. Even if you were to give me this position again, I wouldn't go long. So as I mentioned last time, rather than waiting, I would rather add to my spot position. When it breaks the previous high, that's when I'll use all my cash to buy spot. Not futures, I'll buy spot then. If it clearly breaks through $110,000, I think I'll make a large purchase. At least maybe something like 10 billion won or at least 100 BTC. And newbie members have been appearing on the broadcast since 1 to 3 weeks ago. But for new members, you must remember this, it's not about who analyzes charts better, but who makes more money. That's the battle. And when losing, it's about who loses less. Ultimately, it's about who can consistently make money in the long run. That's the trading principle. So rather than looking at the short, we wait for the ending. If you don't understand this, you're really a beginner. The wave that came down on April 23rd was also ABC. On April 24th, the wave that rose was also ABC. Since then, the pattern seems to have repeated. I'm looking at this expanding, wondering how it goes. The question came down as ABC, went up as ABC, and now it seems to be going up as ABC again. So I think this is how it looks. In this expanding perspective, that could be the case, but as the person asking probably knows, I basically just ignore expanding. It's not something I typically focus on in my approach. Not because they don't happen, but because they happen less frequently. If there really were no other count, I'd go with this, but that's rarely the case. For example, the ending of Impulse has a high probability, doesn't it? Since it's a battle of odds between the two, I interpret it literally. Someone said, it's clear that we should go all in with 10x leverage at the previous high. It's not as easy as you think. If you look now, this was the historical high in 2021, right? When it broke through, the rise wasn't as big as expected. From here, so how was it in the past? Once it broke through, it went up, down, then up again. It's not as easy as you might think to use leverage for a follow-up long position after a drop. The chart is actually drawn like this. Shall we look at this time? Then how was it right before the arrival of the previous high after 2018? It barely broke through, and yes, if you had gotten in here, it would have gone up immediately. Like we always discuss it, spot is okay with this decline. But with futures, moving with 10 times leverage will get you liquidated. I mentioned earlier, how far do we need to understand if this is the ending? So for example, we don't know if this is forming a peak or not, or whether an ending will come or not. But if it does come out, the first TP is at the entrance. It's the starting point of the entrance. This is the place, the first target point is here. And from a support resistance perspective, this is resistance. And now, if this really comes out as irregular, we'll need to address it accordingly. A running flat might emerge this way. But now, what's really difficult is that historically, when a running flat pattern appears, I call this a bullish correction. A correction means a decline, right? But what's in bullish correction? A normal correction is like wave A falls, B rebounds, and C falls like this. That's a common correction pattern. But what's a bullish correction? It should rise and then correct downward, but because the upward momentum is so strong, it falls like this. It comes within an incredibly strong bull market. That's what I think. Going with a running flat means you'll definitely get past this point. Because it means it will go from wave 1 to a running flat correction to wave 3, which means Bitcoin will reach 200 million won within this year. I wonder if that level of capital liquidity being released can be predicted at this stage. Capital liquidity isn't just about M2. I'll show you a comparison of the M2 chart and BTC chart in the next broadcast. Currently, liquidity is not the momentum driving Bitcoin's rise again. It is somewhat good to look at that when predicting prices in the long term.